welcome to the Deep Dive. Okay, so today we're really digging into something quite significant coming out of South Korea. Their Financial Services Commission, the FSC, they've just finalized new guidelines for virtual assets. These actually kick in June 2025. Our mission really is to cut through the jargon and show you how these rules are meant to boost transparency, market stability, and what it means if you're a company thinking about getting involved with virtual assets.
Right. And what's fascinating here, I think, is that these aren't just rules appearing out of nowhere. They're a direct follow-up to this earlier roadmap for corporate participation. So it's a calculated step, definitely a significant one, in this bigger plan they have for bringing virtual assets into the mainstream financial system there.
Okay, so a roadmap. Where do they start? The first step seems a bit surprising, maybe. They're focusing initially on nonprofit corporations, allowing them to sell virtual assets, like donations they receive. Now, that sounds like it could potentially open doors for misuse. I assume the FSC has put some pretty strict guardrails in place. What are the key conditions?
Oh, absolutely. Very strict conditions. It's all about transparency and, crucially, preventing money laundering. For a nonprofit to even qualify, first off, they need to be at least 5 years old, and they have to be subject to external audits. So basically proving they're established, they're legitimate.
Okay, that makes sense. Established players.
Exactly. And here's a big one. Any virtual assets they get as donations, they must be immediately liquidated into cash. Instantly.
Immediately.
Yeah. No holding on to obscure tokens. This tackles that risk of using, less liquid assets as a kind of backdoor for illicit funds. Makes them traceable. Plus, these nonprofits need internal committees to review sales plans. And the banks, the exchanges involved, they have to beef up their KYC, their know your customer procedures, really verify where the funds came from, the purpose.
That immediate liquidation, though, that sounds incredibly strict. Is that seen as just sort of a necessary measure, or are people worried it might put nonprofits off or just be a logistical nightmare?
It's definitely a firm stance, but I think it's largely viewed as necessary, at least for now. It's about building trust, right? Preventing the whole space from getting a bad reputation. So the focus is hard on conversion to fiat. Clear audit trails, less risk from volatile prices or, holding questionable assets.
Okay, so nonprofits have clear rules. Then the FSC turned to the exchanges themselves, the VASPs, virtual asset service providers. Conflicts of interest have definitely been an issue historically in crypto. How do these rules tackle that head on?
They're really quite stringent for VASPs. Basically, exchanges can only sell their own held virtual assets for very specific reasons, like covering operating costs or paying taxes. That's pretty much it.
Really, just operating expenses and tax?
Just those two. And the assets they can sell, they have to be highly liquid. We're talking top 20 by market cap across the major Korean won exchanges. Yeah. This stops them dumping, large amounts of some obscure token they happen to hold, which could totally mess with the market.
Right, prevents manipulation.
Exactly. And there are daily transaction limits, too, like maybe less than 10% of their planned sale volume per day. No sudden floods onto the market, and a complete ban on trading on their own platforms. Self-trading is out, plus full transparency. They have to publicly announce sale plans beforehand and report the results after.
It really sounds like they're aiming for institutional-level discipline for these exchanges. And beyond just selling assets, you mentioned they're also tightening up the listing guidelines, the best practice guidelines for listing. What's the goal there?
Yeah, if we connect this to the bigger picture, it's about tackling that instability and sometimes investor harm that can happen right after a new asset gets listed. We've all seen coins pump and dump right after listing. So they're introducing a requirement for a minimum circulating volume before trading can even start.
Ah, okay. Like ensuring there's enough supply out there from day one.
Precisely. Think of it like an IPO for stocks. You need enough shares available to allow for fair price discovery and stability, not just a tiny float that a few players can easily manipulate upwards, It's about building a more solid foundation right from the start of trading.
So putting all this together,
yeah,
these guidelines, they're just phase one of this larger roadmap you mentioned.
Yeah.
What does that suggest is coming next down the line in Korea?
Exactly. This is just the beginning. This phase sets the groundwork, nonprofits, exchanges, foundational stuff. But the roadmap outlines future phases. The plan is to gradually, carefully allow other types of companies, maybe starting with professional investors, to participate more directly. The ultimate aim, as the FSC puts it, is this robust, transparent framework, one that ideally fosters innovation because they do want that, but also really protects investors and keeps the overall market stable. It's a balancing act.
So wrapping this up, what does this really mean for you, the listener? It shows South Korea taking a very deliberate, very phased approach. They're not rushing. but they are moving methodically to bring virtual assets into their regulated financial world. It's a strategy others are definitely watching.
Yeah, and it really raises that broader question, doesn't it, for any country, really? How do you balance encouraging innovation in these fast-moving technologies like crypto and blockchain with putting in the essential guardrails? You need those for stability, for trust. It's a tricky balance. South Korea is actively trying to figure it out, and their approach, well, it could hold some interesting lessons for how digital assets develop globally. Something to think about.